Good morning, boys and girls. Oh, voice has gone. Oh, what's going on now? Good morning, boys and girls. Welcome to the Flow Show. Hope you're doing well. Just the three of us for the next 3 weeks, me, myself, and I, while K-Man is off to see his young grandson over in Japan. And so I might pull in a few guests over the next couple of weeks just to help along and put a bit of different views on things. But in the meanwhile, it's just me. So we shall get cracking with everything that's going on today. Got a quite eventful day today. US CPI and the Bank of Canada, amongst other things. We will kick off with some data, though. PPI data out of Japan, year on year, coming in as expected at 4%, down from a prior 4.2%. Month on month, PPI coming in flat, was expected to drop a pip. Nothing to worry about there. Still running fairly hot in the price data there from producers. Bank of Japan's Ueda has been out and about, speaking in Parliament, I believe, saying that the price trend is getting closer to target, but we're still below it. Says the BOJ is ready to conduct bond buying operations nimbly in exceptional cases when long-term rates make irregular moves. In other words, they are prepared to intervene in bond markets if things get too unruly. For now, they're just seeing these moves in yields as part of normal market moves. Catherine, nice to see you. Yes, I'm back again. Japan's GPIF, the big pension fund, has decided not to raise its stock ratio in the portfolio that it does every financial year, i.e. how much it puts into various assets. It's keeping to its strategy of only investing 50% into stocks. That's some $1.8 trillion portfolio that they've got running. So they're not putting any less into stocks. They're going to keep the same ratios. On the wage front, we've had three major Japanese auto companies, Nissan, Honda and Toyota, agreeing pay deals, but Toyota is the only one that's agreed in full to wage demands. The others agreed little lower than what was demanded by unions. We're going to get the first real update of all these wage negotiations on Friday. This will come late in the Japanese afternoon, so early in the morning for UK, EU traders, any time from sort of 5 a.m. to 7 a.m. in the morning for us here in the UK. So these first round wage negotiations, or the shunto as it's called, you may recall last year that we had a timeline. I'll see if I can dig it out. Let me do that quickly. I might be able to do that without a fuss. Give me 1 second. Let's see if I can find it. There we go. So this was last year's thingy, and I haven't been able to find one for this year, but what we're getting on Friday the 14th, it's the first tally, if you like, of some of these wage negotiations. So we're pretty much in that area here. So as you see, you get second tally, third tallies, updates, all that sort of stuff. So the first real tally from Rengo and maybe some of the others will come out on Friday. That will tell us whether they're getting close to the expected demands, which is somewhere just north of 6%, I think, in the last look. So they'll tell us how those wage negotiations are going on. Doesn't mean that's all been set unless they have fully agreed, but it just keeps, as I say, a running tally going. So we get the first of those Friday morning here in the UK, Europe. So keep an eye on that one. Could be a bit of a mover for the yen if it's hitting, missing or beating what we're expecting. ECB's Lagarde was out yesterday, but a load of pointless waffle, nothing we haven't already heard before. ECB Simkus says we will see in April if we cut or pause. Thanks for that. Clear as mud. Germany's Green Party are throwing their spanners about again, this time over the debt brake reform. Their Econ Minister Habeck has rejected the debt brake reform to fulfil election promises, apparently. So we've had similar over the 500 billion investment fund, where they threw a spanner in the works over that, then later came round and gave it the green light. I did think the market would have sold off on that headline, but it didn't. I think the market's already knows their game, have a moan up, get a deal, move on and agree it. Some other data from yesterday in the US, jolts coming in a little bit higher than expected, nothing too much around or to talk about around those numbers. The quits level, which is a number I keep an eye on, it just shows, it's called quits, it's when people leave work, but it can be seen as an indicator of people moving jobs, i.e. going up the jobs ladder. And if that's coming in quite strong, that means the jobs market and workers are happy to go looking for other work and take other work. When that level drops, it means that people are a bit more cautious over their jobs, so they don't want to ruffle any feathers, and they're more likely to stay in a job than look for a new job. Anyway, that quits level was up to 3.266 million from 3.197 million prior, so a rise of 2.1%. So okay there from the jolts numbers. Layoffs as well, that came in lower, 1.63 million, lower than the 1.8 million expected, and the prior 1.77 million. So once again, another jobs number that shows that everything is still ticking along okay in the jobs market. And those numbers are for Jan. It's lagging the NFP and other jobs data by a month. Don't ask me why. That's what they want to do. Now we're getting straight into some of the other politics and stuff. So the US has passed a spending bill, or the US House has passed a spending bill to can kick the government shutdown. It's now going to the Senate, apparently. That was according to sources yesterday. Some Democrats are already throwing or trying to throw their own spanners in the works, but they're not ruling out voting on it anyway. But that's another hot potato rolling between our fingers. Puma, they've had a bit of a stinker. They had poor earnings yesterday, and the key comment from their CEO, they also drew down expectations for this trading year as well, and the CEO has brought down expectations, saying what has changed since January is a weak market environment in the US. Obviously, Puma are very consumer orientated. So if they're seeing a bit of a slowdown in the US, that's something we need to keep an eye on. We know that the last retail sales wasn't the greatest, and we'll be watching the next upcoming one, which I think is next week, if I'm not mistaken. Let me double check. Well, I'll double check later. Yeah, I think it's next week. If that's another soggy one, that's going to get the market getting very bearish on the economy again. Right, onto the tariffs mess. Oh, I'm glad I missed all this crap yesterday being off. So we've had it all over again. Tariffs, steel, aluminium. Canada is in the firing line for all this sort of stuff. Also, Trump is going to be hitting cars on the 2nd of April. This is the punt that we got on car tariffs. So we just reiterated that was happening. The US is also telling Canadians that if they're there for over 30 in the US for over 30 days, they will be required to register with the government. So as I say, it seems Canada's pretty much mostly in the firing line compared to some of the others. PM Carney says, my government will keep our tariffs on until the US show us respect and make credible and reliable commitments to free and fair trade. Ontario Premier Doug Ford says we will not hesitate to cut off power to supplies to the US if need be. Then he eased up a bit, saying that him and US Commerce Secretary Lovnick Nick, we like to call him Love Nick, has agreed to meet on Thursday. They will discuss renewed USMCA ahead of the April 2nd deadline in this meeting on Thursday. From some of the others, UK official says the government will not respond to US steel tariffs. The government is continuing to engage with the US to get steel tariff exemptions. Same for Australia as well. They said they wouldn't react, but Trump has ruled out tariff exemptions for them as well. But they said they won't retaliate either. So after all this tariff stuff got thrown around, particularly at Canada yesterday, it was going to double 50% and whatever and be added on and taken away and add to the number you first thought of. Trump said he may back off doubling Canada steel and aluminium tariffs. So we had another up move on the risk off and then him easing back, and dollar CAD came all the way back down again. Moving over to the Ukraine stuff. The State Department said the US and Ukraine took important steps to restoring durable peace. They said Ukraine expressed readiness to accept the US proposal to enact an immediate and interim 30-day ceasefire. Security Advisor Waltz said Ukraine had made concrete proposals and talks got into very substantive details on how the war will end. They're going to speak to their Russian counterparts in the coming days. Now, Russia's response to all that, first thing this morning, we had a sources piece saying that Russia is sceptical about the 30-day ceasefire idea. And in the Kremlin, after that, came out saying, we are carefully studying statements issued after the US-Ukraine talks. Doesn't rule out a Putin-Trump phone call, which could be organised very fast if needed. Says it needs to hear from Waltz and Rubio before it will comment on the acceptability of a ceasefire for Russia. Now, what the politicos in the US have done now is pretty much put the ball in Russia's court. So, touch wood, it is possible that we get some sort of ceasefire deal agreed this week. Which may be good for risk. I don't know if that's going to be a straight line to that. It depends on what Russia wants from that. And obviously one of the big things is not to give up any territory that it's already taken, and it's pushing really hard to take more and more as the days go on. So 30-day ceasefire would be good news, obviously, because you've got to start somewhere. But whether that leads to anything more concrete remains to be seen. But let's start somewhere, and you can't rule out shenanigans during the ceasefire anyway. For those who may have not been following this or not in the UK, we had a container ship crashing into a tanker ship in the North Sea the other day. This tanker ship contained aviation fuel. It was leased out to the US, part of the military service, I think. Anyway, it contained aviation fuel that I think was heading towards Portugal, and this container ship crashed into it, causing a big spillage. And the captain of that ship has been arrested, and sources today claim that he is of Russian descent. Make of that what you will, boys and girls. I'm not going to get the tinfoil hat on and speculate, but we know Russia and China are up to shenanigans, dragging anchors and doing other sorts of stuff. So whether a ceasefire is a ceasefire remains to be seen. So just be careful of that. If you do get headlines, there's a ceasefire, you'll see risk rally, then just be on the watch out for any breaches of that ceasefire and more blame games going on. Right, so as I mentioned, we've got a couple of things coming up today. US CPI and another sticky one expected. We are expecting both measures, CPI and the core, to come down a point to 3.2 and 2.9 respectively. Okay, that's obviously would be good news in terms of the inflation battle for the Fed, but unless it's a bigger drop, it just still keeps things very, very sticky up around that 3% mark. So how to play this one? Well, we know the market is willing to sell dollars at any opportunity. We know the market is getting a little bit bearish on the US as a whole. We know the Fed is on pause. So anything under these expectations, you're probably going to see a little bit more dollar bearishness on the potential of the Fed to maybe not be as hawkish, or maybe tilt a little bit more dovish at their upcoming meeting. I don't think it would change whether they stay on hold or not. But, you know, if you get a number, particularly the core sub 3%, that would be probably big news, because this thing hasn't been below 3% for going on 4 years now. Okay, a long time. That's not inflation coming back to target. Okay, take out all this noise, you know, the big jump up in the core numbers in inflation 2022 2023. It's gone sideways since, but a move under 3% will be a big move for the core CPI. This one's been up and down and around, but you know, something near 2.5%, that would be a bit more dovish for the Fed. Obviously, if we get hot numbers, then that's just going to play into the Fed pause. Again, going to see the dollar rally, but if you pick your pairs, that's likely to be a dip in the likes of euro, dollar, cable. That most likely will get faded, because those dips are becoming very shallow at the moment. Dollar yen, different kettle of fish altogether. That could be up or that could be down. You never know with that one. Right, Bank of Canada, what's coming up for those clowns? Another 25 pip cut expected. Really, the discussion on this one is going to be whether they indicate that there might be a pause coming. One of the big reasons why they have continued cutting, as Macklin said at the last meeting, was to do a bit of front running ahead of possible economic disruption through these tariffs. That disruption still looks in play, okay, which might give them the ammunition or some of the evidence they want to continue their rate path and continue cutting. But on the other side, we keep getting these tariff threats punted and not as bad as they set out to be and all that sort of stuff. So they might decide to go on hold, because they do have a meeting pretty quickly a month later in April. So if they want to see a bit more time, they could say we're cutting again this time, and or we're going to stay on hold and then see what happens in April. So it's a bit more 50-50, this decision, than what the market's expecting of a 25 pip cut. I'm pretty much 50-50. They could cut, they could pause. I think if they do cut, they will maybe give an indication of a pause, because again, we've also got to think about the old neutral rate, which they're getting into as well. So that's it from all the headlines and whatnot. So let's start with dollar CAD and see what's going on in that one. We're still stuck in this zone. Okay, we still keep getting these headline moves out of it, but then it reverts to type and we come back in. Okay, so this is, I've said it before, this is a market that's really pretty balanced. Yes, it's going to move on all these big risk headlines, but as you can see, this was, you know, tariffs part 1, the end of January, beginning of February. This was tariffs part 2, not even close to that magnitude of moves. Okay, and even yesterday, not even close to last week's magnitude of moves. The market is slowly and surely getting bored, we could say, with all these tariff headlines. Obviously, it doesn't mean we aren't going to get bigger spikes if he turns around and decides to tariff something else to do with Canada. Then you might get a big spike if it's big news. But in the meanwhile, the market is seeing a bit of a theme. Okay, tariffs, threats, cans get kicked. Tariffs maybe not as high as what they were originally set out to be. So the market is getting a bit bored of these tariff headlines. So what that means for us is that we can probably rely a bit more on the techs. Okay, we've got some levels we can look at. You know, this 145, 50, 60 area. It was a stall point on the way up before this big move. It's a stall point again. So maybe we're just extending the top of this range a bit. Who knows? Take direction from what comes if you start getting a hold above these zones. As you can see, we haven't really had that. We've had some tentative times where we've held above it, but not for any length of time. If we start to see a proper hold above this zone, then maybe we're moving higher. Think about euro dollar at the 105.30, the 105.0030 level, and then the 108.30.70 level. Think about those type of price moves. You want to see the price holding below like this, but if it doesn't, then you're back in and staying in this noise here. So you can trade the range. This is still probably more a dip buyer than anything else to do with all that tariff threat and whatnot. So any moves down to the south here, unless it's coming on the back of easing tariff tensions, i.e. nothing's going to happen, then you're likely to see the dips well supported into this zone down here again. Otherwise, range is the range. Keep trading it until we get a break and a proper break out of it. Euro dollar, that's broken out. I'm talking about this all week. You've got to wait for either you're breaking back below and holding below, or you're breaking above and holding above. So we had this high on Friday after the NFP up at 108.88. We broke that yesterday. We're now holding it as support. We had the run up to the next level that we've been talking about, 109.40s. Got through by 5-6 pips, held that, back down to 108.88, held that on the nut before another bounce. So this, we're getting this stepping up now. Okay, we had this coming up to 108.30, couldn't get through, couldn't hold it. Then we started holding it, little dip under, holding it. Now we get the break on. So this level here, 108.70.80, is your first support zone. If we're getting back through there, then you need to worry about what's going on in the zone. But if we come down and hold this 70 level, then that's going to be potentially a springboard for a move up above the highs. Now, if we're going to go above those highs, 109.40, we've got another level, 109.60, which came in around here. Highs, holds, supports, resistance. Okay, above there, it's 110 is the main level, and that's a big old level. Look how we played off that from the 112. Resistance broke up to 112, pull back to 110, up to 112, pull back to 110, break and hold. These levels here, 109.40, 109.60, 110, they were all important levels on the way down. They were break points that then held. Break points that then held. Break points that then held. Okay, so they're going to be just as important on the way up. Now, you remember back here, I traded this 112 short. This was one of my big levels. I was pretty much trading that with my eyes closed, and got it down to, I think, down to this area before getting hit on my trailer. Then I bought it here, ran it up there, and I stayed long. I didn't short it up there. I stayed long because I thought we might be getting the break, which never came. And then all the way down, all the way down, all the way down. So this is going to be a big level yet again. Okay, this is another one of those huge ones. I have 5 levels on my chart, or 4 levels on my chart. Let's go. No, I've got 5 levels, I think. Hang on. Yeah, 5 levels. Okay, I keep this chart because these levels are the big ones. Okay, and 112 is one of those. It's one of those big old historical levels that, as I say, I will pretty much trade blindly when we get a test up there when we haven't been there for a while. Okay, pretty much blindly, but not entirely blindly, of course. So if we get back up there, it's going to be a huge one. Okay, I'll probably look to test it on a first test, but obviously I'll see why we're going up there in the first place. If we get above there, then maybe we're looking at something like the 115 area, and there's a bit of a sub-level 114.50, I think, just below that. But this one is another huge level. So keep these levels on your chart. You know all about them. Spoke about them often enough over the last few years I've been here at ForexAnalytix. They always have something to say in the picture. So 110 is going to be the next one, 112 the one after that. But in the meantime, you know where the support points are. So again, it's dangerous. You don't really want to be buying at the top here unless you're breaking some of these levels here, 40s and 60s. If you're going to be buying the dips in towards 108, 80, 70, you don't need to have a massive stop. You don't need to be 100 pips offside to know you're wrong. If you're breaking under 70, then you're probably going to get a move down to 30. Okay, so you can have some nice tight trades, but have some patience. Wait to get in on the dips where you know you can lean your risk against. And if it holds, then you see where the trade goes and you take some profits as they get up to these areas, just in case we can't break them. Derej, I'll look at euro yen in a moment. Euro sterling. I was saying this early in the week. I'm getting a bit of an itch to a short, but I was worried that we were still looking fairly bullish. I said about these higher lows that we were making. It just doesn't have me with a lot of conviction that we've stopped this move yet. And here we go. We've broken up. So I'm glad I sat on my hands for that one at least. Next level above here is 84.60, an area we've messed around plenty of times before. And then you get to the 84.80, 85 level, which again is another big one. This is my 108.30, 70 in euro dollar, this 85 level, 84.80. Okay, look at what we did when we came down 2023, bounced all the way up 270 pips, 280 pips, came down again, held, bounced, decent money to be made if you're buying off those bounces. Then we had the break, and it was a bit of a big break, and then it started holding under, held under as resistance. Then you get this move down. This was all the UK stuff that went on. The budget, all the fiscal spending and everything, market getting a bit wary about Rachel Reeves. And then on the flip side, we had all the Euro stuff going on as well, and that's always coming all the way back down again. So we're on our way towards it. I still got a little bit of an itch to get in shorts, but I may wait until I see what happens around here. Maybe a first test, 85s, 84.80s, I might give it a little go just to see if it holds first time. Bit similar, we didn't quite get there last time back at the end of January, but this is a big level going on here. I'm still not a fan of the euro, even though I'm still long euro dollar. But yeah, we're creeping closer to the spring statement from Reeves. So if the market likes that, then that's when we'll probably see a bit of a dip. If it doesn't, then we're probably going to go up, at least put a test on that 85 level, if not going through. Demi, you want to look at euro yen? I know Kay's messing around in this one a lot. I've been talking about this one a lot. Looks like we've got a bit of a break up, at least above these prior highs that we saw in February. But we just get into a bit of a traffic zone around these 162 area, low 162s. It's just one of those, again, a zone where we've had support and we mess around in it. So again, use this as a bit of a pivot area. Okay, we're trying to get through. It's coming to a little bit of a short-term chart. Let's go 15 minutes, see what's going on. So we've had resistance, we've got the break, and now we can't really hold the top of it up at 162.20, call it. So keep an eye on this 61.80s, 75.80. If we hold there on a dip, that's a bit similar to what we've seen in euro dollar, breaking 108.70, 80, coming back and testing it. This is your important line now. If you get a test and hold here, then you've got every chance of at least getting back to these highs, if not moving higher. And if we do move higher, then we're going to be heading up these sort of areas, 164s, 165, which is obviously the big level above here. So let me know what you're doing, Dimmy. Galaxy, I know you use options a lot to see where activity and gravitation zones resistance can happen. Do I use a market profile volume much on FX? No, I don't use market profile volume because particularly for spot, we don't get a lot of volume data because it's still all OTC. Yes, a lot of it's reported, But it's still a pretty messy picture in terms of getting that data, getting hard data of stuff like that. And obviously the CME CBOT stuff is futures data, so that can be completely different to what we see in spot markets. My zones, my levels, they line up because, yeah, you could call it that's market profile or volume, because if a price stops at a level, it stops at a level because the market has decided that's what it wants to do, either because it's got orders there or whatever. So if it's a support level, that's where the buyers come in. That's where sellers keep selling, but then hits a pocket where there's more buyers and sellers, and that's why levels become levels. So yeah, probably my levels do. It's natural that my levels do tie up with what you'd consider market profile volume. It's just natural. There's a reason a price stops somewhere, and that's because one side tends to be a bit heavier than the other side. So if you use indicators, I know there's plenty out there that do things like that, you know, go for it. If it highlights it for you in a clear, colourful way that can help you trade in, then do it. For me, I don't really need it. I can just tell from a chart where the support and resistance is. You know, I say it often, I don't need coloured lines to trade these charts. I can just trade it by eye, because I know where the market profile, the volume is, because you can see it. And all these lines do is just put a visual picture on it that makes it clear for me and hopefully clear for everyone else. Yeah, you're talking about Oanda, but then you're taking retail numbers, which can be a good indicator at least of what retail markets are doing with it. But then you have to add the caveat that if 60 to 8% of retail traders are losing money, how reliable is that volume data for your trading unless you're going the other way of it? So it can be, I don't want to dismiss it, it can be useful, but it's not something I'd rely on, because I've been on the other side, the institutional side, so I know what drives markets, okay? And it's not retail money that causes prices to stop at various points, okay? Dimi's asking, back on euro dollar, do I take into account the line from October 23rd to 24th? Let's have a look what line you've got going in there. Oh. So October 23 to 24. I was going to a bigger one than that. Let's see what lines you got on that. Right, October 23 to 24. Where are you talking, mate? Oh, 23. Let's go over here. So you're talking this one, I assume. Let's get off that. When you're talking something like that, October 23, 24, or like that. I'm not sure where you're pointing to, mate. There, maybe. That looks like it's in November. Is that the one you're looking at, Dimmy? If so, that's not really, I wouldn't look at that personally. I'm not a big fan of these sort of trend lines unless we're deciphering big moves. There used to be, I don't know if I still got it. I'll have a look. Let's see. It's not in there. It's not in there. There used to be one I was watching in dollar CAD, which, if I can find it, I don't think I can find it, which was working out a big old, there we go, something like that. I think we were working out in the first instance, and then that one on that side. So that was one I was looking at. I would only use, I haven't used them for a while, actually, I don't know why, but I only use it on big long-term moves, usually trend lines. I'm not one, I know Kay uses it a lot, you know, you'd have lines in here and things like that. Oh, that, you know, it's still valid. Horses for courses. But when I look at trend lines like this, they can be a bit subjective. So I tend to only use them on really wide pictures. And this, as I say, this was one that I'm sure I had another one in there somewhere that was a bit tight. I'd have to go back on my charts, but yeah, when you get big long-term things like this, and I want a bit more evidence than just a couple of touches, then that's what I use. But I'm not one for using it too much on the short term. As I say, it's a bit subjective, and sometimes I feel like I'm just trying to put a line in to justify something. But yeah, that one in the euro is. Oh, did I take it off? Where's it gone? That one in the euro, probably not something I would look at, just because it's a bit flaky. If I'm honest with you, I'd rather stick to the horizontal, and because that both of it crept around, the zone, and the zone's more important than the trend line. The zone's had that level 105, one of my big ones. It's had more action than a two-touch trend line, so I'll look at it from that basis. Right, so any boys and girls got anything else you want to talk about while I'm waffling on? Gonna have a look at stocks because everyone's getting their knickers in a twist over what's going on in stock markets. I'm gonna have to do a bit of chart cleaning, I think, because I've got all these bloody lines that I was using as my price action exercises on the way up, and it's going to get a bit messy unless you're in the short-term charts. So we've got a bit of a breakdown. That's I could probably need to move that up a bit, but still, it's not going to make much difference. We're breaking through the 50% retracement at the moment, but we're messing around it. Can't really hold a break below it at the moment, so that is looking like it's becoming a key level. This was a bit dangerous, though. Okay, we got through there. That was a big danger to the rally. This 56, 50, 70 area, big top, double top, and then the break, and then the hold. So this was a big level. Got a half-assed attempt at a retest up there, okay, that's held. So that's given it the gumption to move down. Then we had another area here that was just a bit of a traffic zone. We had the break up, came down below it, and then we just messed around a bit through it. So we've had a little nick under this area, 55.5, but we're back above. So this might become something. If we get him back below there again, then we might be heading lower. And then we got another big level down at 54.5-ish, and down towards a 61.8 fib down here. A lot of people looking potentially for a return back to the 48 area, which we're going to need something really breaky to get us down there, I think. If we just look at the cash price, just put that on the fibs. There's the 48, which comes in around the 50 fib. So it's going to be huge if we get down there. But, it's all right, people getting really bearish. Yeah, we've had a big correction. We've had big corrections before, but, you only need to look at a weekly chart. This might be something big. It might just be another pullback. Okay, so that's why I use the fibs. This phase is a big phase because this one came off that test and then it led to the break. So this fib is probably the most important one you want to look at. You can have other parts of this rally here. You can have one off there, you have one off there, one off there, whatever. But for me, the longer term one, this is more important. Okay, if we're getting through here, 51.20s, that's your first signal that maybe something is going to be a bit different about this down move. And as I say, get back down here, could be a huge level. These are the sort of levels, you can make a lot of money off of. If we come down here and test it and hold it, then on a longer term basis, we've got every chance of then going on to new highs. So I'll be looking at that. But if you saw this week's trade-off, was this week's or last week's? Can't remember. Michael asked a question, would we see 4,800 again in our lifetimes? And I'm on the side that we don't. Okay, but I'll trade what I see rather than what I think. But for now, you could look at this, and this is still in pullback mode. Okay, until such time as we're breaking through some of these fibs. Gold, Reg, how can I forget gold? You're going to keep me on my gold toes while K's off, no doubt. 1 second. This is another one I'm going to have to tidy up. I'm even losing myself on the line, some of these. So again, this was just me showing you how levels develop when we were doing all this stuff on the way up. Gold, and I know K-Man's levels are pretty much the same as mine. We've got this 2880 level. We've had, it was a level on the way up. It's been level. It's been a bit of a messy one. It hasn't been as clean as I would like it, but then you get these little clean moments where it's going to hold. I mean, you can't get cleaner than that. You know, a double go at it, and it held both times. Where am I going? Up top, 2920, 2930s. Again, old line that we've had a lot of traffic around. Now it's developed up to 30s as well, so a bit of a zone up here too. We're now holding this 29. It can be anywhere, 2907, 10, whatever. We're holding that for support, but we're not looking like we want to bust up and go and have a crack at these highs. I thought we might be wanting to have a look up here in these moves, that we might get a move up towards these highs. So for now, this is becoming a very, very solid top, because it looks like everyone who was selling up here is protecting the level down here. Okay, if we're breaking above here, and that'll be what, 1, 2, 3, 4 goes we've had at this already. If we get another move up here and it starts to break, then we're probably going to be on for a run, at least at 2940s, if not another look at those highs. But what I would say, if you get a break up here, maybe wait for a confirmation. Maybe wait for it to break, come down, test, and then if you're looking to go long, that's the move you want to look at. Or else, you know, have a little go against these levels down here. If it holds again, you know, but know where you want to take profit if you do get in here. This one, I would look to maybe do a bigger trade on a break than going long against some of these levels down here. Just because this is a bit messy in here. This one would be potentially more of a clear move. As I say, probably get 2040s, 2940s pretty quickly thereafter. Oh, excuse me. Brand, you can put too many lines. I do need to clear up this chart. A lot of these lines, as I explained, were all put on when we were coming up, making these moves up, just to see, because this was all uncharted territory. Okay, we didn't have historical price to rely on here. So all these lines are just where are the levels going to develop, and we've got a chance to wipe out some of the low ones, but I'll look to I've taken out a good chunk of lines that we had up here on the way up, but there's still stuff that we haven't yet tested down here. So that's why they're still on there, but I can probably get rid of some of the lower ones and just do it all again if we come down. Right, anything else for anything else? If not, we should call that a day for today, because it's not too long while the Yanks clocks are ahead of everyone else. We've only got 45 minutes until the face show, so I'll be on that as well. Can't keep me off the airwaves. We'll call that a day. Thank you very much, everybody. Have a great day. Watch out for the CPI data and the Bank of Canada, and we'll go through what happened tomorrow. Have a great day, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.